Welcome back to the channel. In today's video, I'm going to share a new Bitcoin strategy that I've started to employ probably 3 to 4 weeks ago. And it's somewhat similar to Grant Cardone's new Bitcoin strategy that I just saw a few days ago. So what I've started to do is in my Schwab account, which I'm going to show in a little bit. I generally always advise people to keep your dividends, your drip on, your dividends reinvested feature. So that, let's say, for example, you own Blackstone. When Blackstone throws off a $100 dividend, you're taking that $100 and buying more Blackstone. If you own Apple, so on and so forth. I actually met with someone about a year ago or so, and she was working with a company, and she just forgot to check her dividends reinvested, and it went on for about 20 years where it went into cash in her account, and it probably cost her $400,000, $500,000, $600,000 over that period of not reinvesting dividends. So I am definitely a proponent of dividend reinvestment. But what I decided to do after doing a lot of different research and thinking about things is to actually uncheck in my Schwab account my dividend reinvestment and to allow everything to go into cash, and then to take that cash and to use it to buy Bitcoin ETFs. Specifically, there's four that I'm targeting. IBIT, which is probably the main one. BITO, which I think uses futures. It's a one-time Bitcoin. And then BITX and BITU are 2x Bitcoin. So they have a little bit of juice, a little bit of leverage there. And using those funds to take a bigger position in Bitcoin. And, I'm not necessarily a Bitcoin maximalist like a Michael Saylor or a Fred Krueger, Raoul Paul, Robert Kiyosaki, and others who are big Bitcoin proponents. I do own Bitcoin, but it's something where I'm not a maximalist to the extent of, let me sell my $670,000 in equities that I enjoy, that I like, and let's put $670,000 in Bitcoin. And let's take, my symphonies here. We'll reduce the screen just for a second. Let's take $411,000 in symphonies that are compounding capital at nearly 42%, and let's buy Bitcoin. So let's buy, basically, it's $1,001,000-ish, $1,050,000 to $1,001,000. Let's take that $1,050,000, $1,001,000, and let's buy, Bitcoin with that. That would be kind of a Bitcoin maximalist, and it's not something I'm willing to do. And the reason I say it's similar to Grant Cardone's idea, and I'm going to play a little segment in a bit. His title of his video is actually, I'm a Bitcoin fanboy now, which is kind of funny. Is he's also in the same boat. He's not saying he's necessarily a Bitcoin maximalist. And so what I mean by that, he's not taking his, I don't know how much real estate he has, 500 million, a billion, whatever it is, and selling all that and saying, I'm going all in on Bitcoin. But what they're actually proposing in his next fund is to take the cash flow from the real estate asset and buy and hold Bitcoin with that, which is what I'm doing. Dividends, you could say, is the cash flow of stocks. And so I'm taking the free money, or if the cash flow from my stock holdings and purchasing Bitcoin. So let's start with a minute of Cardone here. This is so he just published this. He just published this. Let me just slide this a little bit over here. A couple days ago. So here we go. So you can see there he's let's go over here now. So you can see that he's in process of launching that fund. I think it's a great idea. For some people, for whatever reason, they wouldn't open a Coinbase account. They wouldn't know what a ledger is with a seed phrase. And maybe I mean, to me, having it in an ETF version makes a lot of sense, but for some people maybe it doesn't. So it's kind of a great idea. You're getting the benefits of the real estate, the tax benefits, depreciation, so on and so forth, and you're taking that cash flow and essentially using it to dollar cost average it into Bitcoin. So maybe there's a big Bitcoin crash, it goes to 50,000, but your rent checks are coming in every month, and you're using that to purchase Bitcoin. So let's kind of slide this back over here. So you can see this is my Schwab account here, and you can see over the next 12 months, my monthly average of dividends is likely to be approximately $3,300 for a total of $3,900. So you can take it month by month. You can see January over 3, February 34, 32, 29, 31, so on and so forth. August looks like a nice month, almost 4,000. December is a nice month, 4,000. And if we go to 2024, this month, you can see so far I've received 1186, and I'm likely there's still almost 3,000. So a nice month here, and I'll be taking all of this, which I've started, and buying dollar cost averaging almost on a daily basis. Because what I do is I'll see that dividends come in, and that morning, that afternoon, I'll purchase. So, for example, in probably the most recent day is really instructive. So here's a perfect example. So I had a nice dividend here, $60 dividend from ExxonMobil. And BITX was trading at the time for $57, so 1-to-1. Now, normally in my account, what would have happened would be that $60 would have come off from Exxon, and it would have purchased Exxon stock, more Exxon stock, $60 worth of Exxon stock. But again, I'm changing it up, and then you can see as you scroll down, you can see like these dividends: Johnson & Johnson, Target, Sanofi, Chevron, AG&C. It wasn't the 50 some dollars. BITO is the least expensive. I think it was maybe $30. So I took $35. So I took 25 and bought Bitcoin ETF, and then I had a little $10 left over, so I purchased Ulti, which is an income fund. So this is my new strategy. Again, it's somewhat similar to Cardone in that he's using cash flow from real estate. I'm using cash flow from dividends and using it to dollar cost average into Bitcoin. I think it's a heads I win, tails I don't lose too much proposition, in that it's unlikely that Bitcoin goes to zero. Certainly can it be volatile? Can it decline from around the 100,000? Definitely. But if I'm doing the daily dollar cost average, I'm likely to kind of pick up some of it in those volatile periods and downswings. And it's something where, let's say, you see that it's about 39,000 for 2025. So let's say I do this for a year, and I pick up $39,000 of Bitcoin. Well, if you listen to like a Bitcoin maximalist, a Michael Saylor, a Fred Krueger, a Raoul Paul, Kathy Wood, and others, they're thinking, oh, Bitcoin's going to go to $1 million by 2028 or 2030. Or Michael Saylor has, I think, at 13 million by 2038 or something. So that 30,000, if it 10x, becomes 300,000. But if that 30,000, if Bitcoin declines by 50%, I lose 15. I'm down $15,000. Whoop-de-doo. I mean, you can see here in Composer. I mean, just today, I'm up nearly $11,000. So if Bitcoin declines by 50%, is it the end of the world? And because I've taken free money, and that to me is the beautiful part about it, is it's not kind of going all in like a gambler and saying, pushing your chips, saying I'm all in, because that would be selling, these $1 million in assets here and a million one, whatever it is, and saying, I'm going to buy 11 Bitcoin, because Bitcoin's going to go from $100,000 to a million, and I'm going to turn a million one into 10 or 11 million. No, I'm gonna just turn off the drip, reinvest, and go from there. But yeah, so that's the plan. I'll keep everyone posted on how it develops. But you can see my Composer account has just done tremendously. I'm nearly at 42%. Um, the S&P is what, at 28, and Nasdaq's at 31. So look, everyone's a genius in the bull market. I've always said to people about Composer, what'll be fascinating to me is if we have a 1973, 74, 1987, a 2000, a 2008, a 2020, where, let's say the Nasdaq is down 30% and the S&P is down 19%. Am I flat? Am I down 10%? Am I up 10%? That to me will be the real test, so to speak. But you know, definitely here I'm at 10, 11, 12 points of alpha this year, and so you can see some that are doing well. A lot of the TQQQ for the long term, some Manhattan projects, beta ballers have done really well. So yeah, I'll keep everyone updated on the Composer. Let's see if I'd love to hit 42% today. And then I'll just kind of finish here with, Fred Krueger, the Stanford PhD mathematician, not the horror movie Fred Krueger, right? So he's influenced me a lot. He said one thing that I'd like to share. I watch a lot of his videos, and one of the things he said to young people when they ask for advice, he says to them, work in AI and hold Bitcoin. So that idea of holding Bitcoin is very much a Fred Krueger idea. So let's just wanted to let's actually do this. Kind of just, if you're not familiar with Fred Krueger, and let's watch a minute of this. You get a sense of who he is. So one of his things that he talks about is, he used the term trad finance, traditional finance, and basically, people that or Goldman or Blackstone or JP Morgan, and run pension funds and insurance companies. And these people, he feels, are slowly coming around, and you're going to start to see more and more allocations from governments, the U.S. Bitcoin Reserve, perhaps, and traditional finance types. And that inflow is going to continue to rise. You hear him there talking about $1 million a coin. So that'd be about 10x from here. He thinks it's better if that happens over 10 years. He thinks if it happens over 2 years, then it's kind of a bubble. Maybe it goes from 100 back down to 700 or 500, but that even a million in 2 years is not completely out of the equation, so to speak. So you can see, his idea of holding Bitcoin, from advice to young people, work in AI, hold Bitcoin, has influenced me, but I'm doing it a different way using my dividends, in addition to other crypto that I hold, but just to want to continue to take a bigger position. So anyways, that is it for today. Any questions, comments, like and subscribe, all of that. Take care. Ciao.